Let's start your investment journey.
Hi, and welcome to another edition of our weekly market outlook report for the week starting Monday, the 1st of March. We have a busy week ahead of us, which starts with China, UK, and US manufacturing PMI data and Japanese unemployment rate for January on Monday. On Tuesday, we should be on the lookout for RBA rate decision and statement, Eurozone preliminary consumer price index data, and Canada GDP December figures. Going forward, Australian GDP Q4 figures, Eurozone market PMI for February data, and US ISM services PMI figures will be followed by Fed's beige book in the afternoon, and they'll all be closely watched on Wednesday. On Thursday, the main point of interest is reserved for Australia trade balance, Eurozone retail sales, and unemployment rate for January, which is expected to show 8.3%, in addition to US jobless claims data, which is expected to come in at 807,000. The week will finish on Friday with probably the most anticipated data release for the forthcoming week, which is US non-farm payrolls, which are expected to come in at 110,000. Unemployment rate is expected to spike higher to 6.4% from current 6.3%, and average hourly earnings data. Now, let's take a look at few markets. Let's start with the DAX, or German 30. The price action is consolidating sideways in daily time frame here. Key trading level for us is at 13,880. The level keeps on repeating over and over and over again. Rally into 13,880, call it 13,900, and a rejection or a gradual move lower and a loss of these current lows at 13,700 could trigger a deeper consolidation to the downside. Therefore, continuation of this sideways move targeting additional support at 13,640, 13,560, possibly even lower towards 13,400 to the downside. Alternatively, if we see a rally and a breakout, an end of day close above 13,880, a retest of that level from above as a newly found support, that could trigger a continuation of this sideways consolidation, targeting additional resistances initially at 14,000, 14,100, 14,180 on the upside. Dow Jones, first two significant bearish candles here in end of day time frame. Yet again, these are the two last trading days for February. Let's see what happens with the month-end rotation and how the markets react on the first day of March. Key trading level going forward is at 31,300. So cluster of these previous highs here and also these lows. So this is a horizontal resistance, a rally into that level and a rejection. Or a gradual move lower and the loss of these current lows at the moment at 30,830 could open the way for a deeper corrective move targeting additional support at 30,730, 30,600, 30,470, possibly even 30,300 on the downside. Alternatively, if we see a pullback and a rally, or a gradual move higher and a breakout above 31,300, an end of day close above that level could trigger the extension to the upside, therefore continuation of this uptrending market. 50-day moving average held in that case, pointing to additional resistance on the upside at 31,480, 31,650, 700, 31,900, possibly even 32,000 over a medium time frame. Euro dollar, apologies. Euro dollar is uptrending in a longer time frame. However, the current price is capped by 20 and 50 period moving averages. Key trading level for euro dollar is at 121.70. The same level keeps on repeating over and over again. Couple of highs, lows, and highs. Massive rejection here, as you can see with the wick being here, and the body of the candle closing below that level. And then we saw this massive reversal, i.e. US dollar strength, euro weakness, which formed this bear flag forming here. They have the tendency to break to the downside. So if we see a rally into 121.70 and a rejection, or a gradual move lower, loss of these lows, retest of these lows as a newly found resistance, would open the way for the continuation to the downside, targeting 120, 119.60, 119 support to the downside. Yet again, this is a longer term major support trend line here. Alternatively, if we see a rally and an end of day close above 121.70, that could open the way for the spike higher, targeting additional resistance at 122, 122.40, possibly 123, 123.50 to the upside. Cable appears to be more bullish. We are seeing corrective pullback here in cable. I have a number of trend lines drawn here. I know the kind of price action in the chart is becoming a little bit more cluttered, but I'm doing it just to illustrate the fact that cable was overextended on the upside towards 142.50. This appears to be a healthy pullback and a profit-taking exercise for anybody who was long all along. Initial resistance on the upside is at 140, rally into 140 and a rejection, or possibly a gradual move lower. Loss of these current lows at 139 could open the way for the retest of deeper support at 138.50, 138, which is the shaded area here. Loss of this trend line could open the way for a dip lower, targeting 137.50. Still uptrending. Alternatively, if we see a pullback and a rally, or a gradual move higher and a breakout above 140, retest of that level from above as a newly found support, that could trigger continuation of this uptrending move, targeting additional resistance at 141.50, 142.50, possibly even 143, 144 over a longer period of time. Dollar Japanese yen is nicely uptrending. The current price action is creating the sequence of higher lows. It's rising above 20, 50 and 200 period moving averages. Key trading level is at 106, pullback to 106 and a rally or a gradual move higher and a breakout above 106.90 could trigger the extension to the upside, targeting 107, 107.50, 108, possibly even 108.50 on the upside. Alternatively, if we see a pullback lower and a loss of 106, pullback, loss of 106, that could trigger a deeper consolidation to the downside, targeting additional support at 105.50, 105 to the downside. Lastly, let's talk about gold. Gold had a massive bearish pullback here on Friday. This was triggered by a combination of US fixed income bond yields and then also US dollar volatility. Key trading level going forward is at 1750. So rallying to 1750 and a rejection or a loss of these current lows at 1715 could trigger the continuation of this selling pressure, targeting additional support initially at 1700, and that 1700 represents a major daily support level. Obviously, connecting this sequence of lower highs with a trend line, it's a round number, and also in the past there was a consolidation around 1700, so people remember that level and respect it as a round number. An end of day close below 1700 would trigger some further bearishness, targeting additional support at 1675, 1660. However, if we see a pullback to 1700 and a rally, or a gradual move higher, breakout above 1750, then that would target 1770 on the upside, breakout above 1770, and end of day close above 1770 could trigger the spike higher. Short squeeze, targeting additional resistance at 1800, nice and round number, possibly even 1820, 1830 to the upside as a logical upside resistance. Now, thank you for watching, thank you for listening, stay safe and happy trading. Bye for now.
Let's start your investment journey.